Good day Forex trader. Your USD Forex signal, more upside ahead of EU inflation data. There is a likelihood that the pair will keep rising as bulls target the next key resistance level at 1.1400. Bullish view. Buy the EUR/USD pair and set a take profit at 1.1400. Add a stop loss at 1.1260. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1310 and a take profit at 1.1260. Add a stop loss at 1.1400. The EUR/USD pair tilted higher as investors reacted to the Russian invasion of Ukraine on Monday. The pair also reacted mildly to the latest American consumer confidence data. It is trading at 1.1337, which was higher than this week's low of 1.1288. Russia and Ukraine crisis. On Monday, Vladimir Putin delivered a major speech in which he agreed to recognize two parts of Ukraine. He then immediately asked his troops to move to the two areas for peacemaking. The move was condemned by both Ukraine and its Western allies like the United States and Germany. And in response, Germany decided to halt the Nord Stream 2 pipeline project that will bring natural gas from Russia. A coalition of allies like the US, UK, and Japan also decided to implement limited sanctions on Russia. The countries warned that a further encroachment into Ukraine will lead to tougher sanctions that will isolate Russia in the world market. Meanwhile, the conference board published relatively strong economic data from the US. The data revealed that consumer confidence declined from 111.1 in January to 110.5 in February. This decline was better than the median estimate of 110.0. According to the board, most Americans continue citing inflation as their major concern. Further data revealed that the American economy did well in February. According to Market, the flash manufacturing and services PMI rose to 57.5 and 56.7, respectively. These numbers provide the Fed with more motivation to tighten. The next key catalyst for the pair will be the upcoming Eurozone inflation numbers. Economists expect the data to show that prices jumped to more than 5% in January. While these numbers are important, their impact on the pair will be a bit limited considering that Eurostat already published the estimates 3 weeks ago. EUR/USD forecast. The 4-hour chart shows that the EUR/USD pair formed a strong support at 1.1287. It has struggled to move below this level several times before. It is trading between the 38.2% and 50% Fibonacci retracement levels. Also, the pair is trading at the same point as the 25-day and 50-day moving averages. Therefore, there is a likelihood that the pair will keep rising as bulls target the next key resistance level at 1.1400. This view will be invalidated if the price manages to move below the support at 1.1300. GBP/USD Forex signal, sterling is stuck in a narrow range. The pair will likely remain in this range today, with the key support and resistance levels to watch being at 1.3540 and 1.3637. Bullish view. Buy the GBP/USD pair and set a take profit at 1.3700. Add a stop loss at 1.3545. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3560 and a take profit at 1.3500. Add a stop loss at 1.3650. The GBP/USD pair held steady as investors watched the ongoing happenings in Europe. The pair is trading at the important resistance of 1.3600, which is a few points above this week's low of 1.3540. Ukraine crisis. The main theme in the market this week is on the ongoing crisis in Ukraine. On Tuesday, the Russian parliament passed a bill that allowed Putin to send troops to some parts of eastern Ukraine. In a statement, the country's foreign minister said that the goal of this deployment was to ensure peace and stability in regions that have been at war since 2014. Russia accuses Ukraine of not doing enough to ensure peace and stability in the region. Meanwhile, NATO warned that the new measures by Putin are intended to give him more power to invade deeper into Ukraine. On Tuesday, the UK said that it will unleash sanctions on Russian politicians that voted to recognize Donetsk and Luhansk. Most members of the Russian Duma voted to pass a law recognizing the two breakaway regions. The UK also announced sanctions on 5 banks and 3 people close to Putin. Many politicians are calling on Boris Johnson to tighten sanctions. The GBP/USD also reacted mildly to the latest American flash PMI and consumer confidence data. According to market, the U.S. manufacturing and services sector did well in February as more states abandoned most COVID restrictions. The manufacturing and services PMIs increased to 57.5 and 56.7, respectively. As a result, the composite PMI rose from 51.1 to 56.0. The same trend was seen in the UK, where the two sectors did well. Further data by Conference Board showed that the country's consumer confidence fell slightly in February as inflation remained to be the biggest challenge. GBP/USD forecast. The GBP/USD pair has been in a narrow range in the past few days. It is trading at 1.3600, which is between the ascending channel that is shown in yellow. It is also trading along the 25-day moving average while the average true range, ATR, has pointed upwards. The ATR is used mostly to measure the amount of volatility in the market. The pair is also lightly below the 23.6% Fibonacci retracement level. Therefore, the pair will likely remain in this range today, with the key support and resistance levels to watch being at 1.3540 and 1.3637. AUD/USD Forex signal, weekly bullish. The New Zealand dollar rate hike is supported the Australian dollar. Today's AUD/USD signals. Risk 0.75%. Trades must be taken before 5 p.m. Tokyo time Thursday. Short trade idea. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7293. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7207 or 0.7157. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. AUD/USD analysis. I wrote last Thursday the most likely outcome here was a continued choppy rise to 0.7250 if the new support level at 0.7157 held. This was a pretty good call as that support has continued to hold and the price has continued to advance towards 0.7250. Although this big quarter number has not yet been reached. The technical picture is weekly bullish, with the price printing a new higher support level at 0.7207. The AUD is strongly positively correlated with the NZD, and the RBNZ has just hiked its interest rate and signaled a more hawkish pace of future hikes, so the stronger NZD may be pulling up the AUD, reinforcing the bullish case here. The problem for bulls is that volatility here, and in the forex market generally, is very low, and the price is not far from 0.7250 which could prove to be very resistant. The AUD is also vulnerable to a shock which could see risk sentiment suddenly deteriorate, especially if Russia were to launch an invasion deep into Ukraine. I think that if the price retraces to 0.7207 and bounces there, it will make a good long trade to 0.7250, but if the price hits 0.7250 first and stalls there, a short trade could be taken successfully. The problem is that volatility is very low, and the action is quite choppy, so any trades here will really need to be monitored on a short time frame.